Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. So let's take a look again on the gold market. So today I also do not want to be annoying and just to not prepare the really big report. So as yesterday I said in euro currency, it should not overload you with the information. We have taken a look only on a very important subject yesterday on the microeconomy background for starting of the soft policy from the Fed, and we explained why they will have to do this. They actually have no choice to start cutting rate and maybe starting the quantitative easing somewhere in May or even in April. So today we will take a look at the same subject but with a bit wider aspects in terms of the macroeconomy and the gold market. And we explained this moment from the point of view that actually United States fails to fulfill its obligations, which is come from the status of reserve currency. So this was suggested the major agreement between the major parts of this system, it's Bretton Woods system, that United States actually has guaranteed that the return on reserve currency should be higher than inflation. Other words speaking, investing in United States debt should bring you the yield higher than the rate of inflation in the United States dollar. And in recent few years, or even around a decade, the Fed is failing to provide this feature of the reserve currency. And you already could see the results of this. So the major countries that provide the background for the money supply in the United States dollar, which is actually consumer good background from the China, petrodollar, which is providing the background in hydrocarbons, is starting to sell United States debt. So this is by far not very fast process, but it is speeding up. This is among the all other factors that we see currently in the market, and this unavoidably lead to trigger inflation very soon. And if you consider these two factors, so today's report on the gold have to be considered together with the things that we have discussed yesterday. You see that actually the Fed, United States Treasury, and in general United States stands in a checkmate situation where actually they have no other options. So, and it's already could see that some calling for that among the Democrat politics who called to just really abandon that obligation and put all efforts on saving on the United States dollar system. So that's the first moment that we have covered in today's report. And also we have taken a look at some forecasts from the big banks, from JP Morgan, UBS, concerning the price of the gold in the next year. So some other factors we have considered, but once again, it's really short report today, not really very extended. So it will not take lots of time to read it. So returning back to the technical picture, here we do not have really lots of changes compared to what we discussed through the week. You could see that across the board right now we've got the pullback. So first of all, 10-year yield has reached the 1618 extension since then in the retracement. Dollar index also stands in some minor pullback here. This weekly chart, so if we'll take a look at the daily, you could see there's some minor retracement. And the same thing we see on the gold. Gold stands in a normal, reasonable response to the major 618 level on the daily chart. As we already discussed a few times, here, although we think that the chances for that are not really significant, but at least theoretically, it is still possible this ABCD retracement to the downside. And with the performance here on the gold market, we have our task here to catch the first signs of the possible directions. Currently, we're intent to check the bullish context, and for that purpose, we need to keep an eye on the two levels. First one, 2060, that already has been tested, on Friday is actually has come from our analysis. If you remember, we discussed the flag pattern in last weekend, and we said this probably will be the breakout because this is bearish pattern, and this has happened. Now take a look. Market is retesting the neckline, and existence of this pattern, which is reverse head and shoulders, and two standing levels very close in confluence, makes our task relatively simple. Because if gold indeed bullish market and keeps the bullish sentiment, it should not break it down, because it is absolutely irrational for the bullish market. At best case, it even should not drop below the 2060 and start upward action. But for some compromise, we could accept some minor penetration and drop below the neckline. So here we're watching for the 2045 area as well. And right now we are treating overall situation from the bullish point of view, and suggest considering probably some patterns or if any stops will be formed for taking the long position. So as we already said, it might be applied some step-by-step entry, scale in. So taking position here, if market will drop, take the rest right there, or you will be waiting for it just drop and watching for patterns around this confluence. It's not really very important. The major thing what I would like to say is that we're just currently watching on an overall situation from the bullish point of view, and we're considering taking the long position by far. If by some reason market will drop this confluence, situation could start changing. And yes, maybe even retracement, this A, B, C, D drop back to the 20 even area 1950, it will not break the overall bullish tendency, long-term tendency that we have from the monthly and on the weekly chart. But in the short term, it will be really significant. And as deeper market will start dropping below the confluence, as higher chances will be taken out of these lows, dropping below 1975. And more chances will come in favor of this A, B, C top, D pattern. That's why this level is very important, and that's what we intend to keep an eye on. Meantime, on our chart situation stands very similar to what we have discussed on the euro currency. Here you can see market hits the OP, shows the reaction, but still close to the end of session, it still keep dropping below the OP area. And from that standpoint, it seems that chance of the reaching of the XOP stand relatively high. So this is 2052, which is very close to the 2045 that we are watching on the fall time frame chart. That's why the starting point of our training plan for the next week is watching for this level and just watching what the patterns might be formed here. If we'll get some bullish pattern, I don't know, maybe the butterfly will be formed here. So for instance, if market will, let's take a look, extensions 1618 stand precisely at XOP. If we'll get the butterfly here, we could consider taking a long position. Why not? Especially because fall time frame chart provides a good support area. So that in two words that we intend to do in the next week, and then we will see what will happen. So how market will respond on the 2045 area. So that's our view. We wish you to get really good time with your family, coming to the new year, and see you already on the next year.